Good morning, traders. After a record break in October, the Nasdaq just got clipped by a 2% drop, its largest slide since summer. Obviously, it wasn't just Nasdaq, all major indices, and this is spilling over in markets today as well. So let's break it down. Context is clear, of course. Wall Street's biggest movers, especially AI names and semiconductors like Nvidia and AMD, finally succumbed to heavy profit taking as valuation fears hit the headlines. The Fed, of course, did cut rates last week, but Powell's comments were less dovish than many hoped. That kind of has prompted caution. So the last leg to the upside, I guess, um, maybe perhaps until we have more clarity on the US shutdown or what's happening with earnings. Major banks like Goldman Sachs and also Morgan slightly also sounded the alarm bells on stretched valuations, and they did warn of potential 10, even 20% market drawdown. So this sell-off was led by AI and chip names as investors reassess whether the AI boom can keep pace with the market expectations. Palantir, for example, reported an upbeat forecast but failed to sustain the tech beat. And Nvidia slid, Alphabet fell, Microsoft crashed, and of course others joined in on the downside. So the technical warnings um, have been flashing for a while. Nasdaq's open diagonal pattern um, has, of course, been one of the key chart patterns that we have been talking for a while. Now, what we do see after this extension to the upside, which has shown repetitive divergence signals, with the last one, of course, from September being the most important and most kind of sharp as well, brought us down to where exactly? To support. Okay, so this is the support that connects the November 21 high and the December 24 high. And now we'll come exactly at that level, okay, pretty much, and seeing a potential bounce. Not a potential bounce, we do see a bounce today, but given how markets typically move, there is potential for further declines. If we assumed that this is a bottom, we could see a move up to 2560, 2574, or even as high as 2587, and then continue to the downside. And the next level to the downside would, of course, be the triangles um, upside upper trend line. Obviously, in between, you've got also, actually, it's not right like an in between. I think it really depends on when prices are going to meet that support, the 24K previous all-time high, the previous correction low, which was very sudden and led to a what? To, oh, sorry, 1 second, let's get the ruler. That was a nearly 5% drop, right? So this one is smaller um, and not as sharp. So we currently do not know how to interpret it so far. It could be a similar scenario, obviously much shorter. Maybe we're going to see another leg to the upside. It's not certain, but if we remain below the 50%, okay, Fibonacci here at 2474, 2574, sorry, then most likely to see a decline. How do we typically see these play out? Well, this could be, it's not as large, but it could be a dead cat bounce. Okay, so but regardless of whether this is a dead cat bounce or not, we do see a pullback, right? And pullbacks, we want them to stop at around the 38.2 because they are considered to be shallow. That's around 2560 currently, right? So we would prefer and we would want to see something like this taking place, okay? Because that would increase the chances of further downside. It would show that bulls do not have enough power to move higher than the 38.2. And this would open the door down to 24.26. And if we did use the Fibonacci extension tool as well, and we come down to 38.2, we do come around at 24.50, which is very close to the 24.26 level. And then, of course, the 23.6 where we currently are bring us exactly to the previous bottom. So maybe that's it, but I don't think so. Typically, moves like this are kind of see some sort of consolidation. So I would be expecting to see some sort of consolidation pattern here, perhaps for the next couple of days, maybe up until the end of this week, and then perhaps next week is going to lead us to further downside. But of course, this is going to depend on a lot of catalysts as well. Now, on Friday, we do not have the NFP, although it's scheduled. It's very unlikely that it's going to be reported unless if we have an reopening of the government overnight or tomorrow, which I think is highly unlikely. And then we do have, of course, Nvidia's November earnings, which I think are either on the 17th or the 21st. So we're still far from that as well. So maybe markets are indeed like taking a break currently with this particular move to the downside, maybe, leading us to close to 24K. And in this particular case, I would personally be looking to go short at the 38. Okay. I would be looking initially at like the 25K or so, and then down to the 24. My stop loss would be above the 78.6, just to ensure that we're not we do have enough space to move. Okay, obviously the 61.8 would be for me the maximum to the downside. It's possible to go 78.6 and still remain within this territory, but it will just be probably a longer term consolidation. So this is what I would be looking down to the 24K. So it's good risk to reward ratio, even if you look at it, in the shorter term. Obviously, the 25K is not that great. It's only 1.2, 1.3, but this is just the first take profit. So this is what would be the trade for me. On the flip side, for those who are confident this is going to continue to the upside, and depending, of course, of how we're going to see this move, I would be assuming a 61.8 initial leg, correction down to 23, and then further upside. So I would wait for a long position. I would wait for that to come at least first in the first leg up to 61.8, and then we'll be looking to enter the pullback at around the 50, a stop below the previous low. And of course, you are restricted to the upside because we are in price discovery territory. So it would be a bit more of a stretch. First profit level, of course, take profit would be at the previous record high, and then we would be looking to move on the round levels. So that means 26.50, 26.75, and then eventually 27K.